Welcome back. We are now hearing about potential 10x's from where we are in the market today, including Max Kaiser saying that Bitcoin is going to $850,000 this cycle, which is effectively a 10x from the most recent prices in the $80,000 and $90,000 range. But is this actually going to happen? We're going to be discussing all of really what's happening in the macroeconomic environment, what's happening from the strategic Bitcoin reserves already getting vetoed in certain states. The one political party is kind of pushing back on the stablecoin bill now. And so there's a lot of kind of questions about this bull run. Is the bull run over? Do we still have a 10x from here? Are we going to see an altcoin season? Are the AI cryptos going to pump? And we're going to be discussing all of the metrics and the macro in this video. Don't forget to give this video a free thumbs up. Hit that subscribe button. That way you never miss a new video. We have a lot of new viewers on this channel, but not all of you are subscribed. So make sure you guys are subscribed. And if you want to help support the channel, click the join button down below to learn more about becoming a channel member right here on the podcast. Thanks to everybody who does support and give thumbs up every single day. Let's get into today's topics. So starting out, this 10x money multiplier for Bitcoin could take Wall Street by storm. Publicly traded firms relentlessly buying Bitcoin for their balance sheet could result in significant buy pressure. But what have we seen? Over the last year, we've seen more companies buying Bitcoin. We've seen MicroStrategy continuing to buy the top of the market, which, by the way, just the past week that I'm recording this video, they've been purchasing, $1.4 billion worth, $180 million worth. So they're still purchasing, and they're purchasing at a very rapid clip. But what other companies are doing this? I mean, we are hearing about other companies that are kind of getting into the crypto space, including non-Bitcoin related products like DeFi Development Corp. This was a company formerly called Janover, and just recently Solana developers purchased this company and basically started a Bitcoin acquisition strategy similar to MicroStrategy, but with Solana. And now we're hearing that they're going to even be raising $1 billion to buy more Solana. So we have buy pressure in the Bitcoin space from MicroStrategy, Marathon Digital, potentially GameStop, the BlackRock ETF, all the actual ETFs. We've been seeing now funds raking in over $2 billion, pushing the 3-week haul to $5.5 billion. So what does that actually mean? Well, that means over the last few weeks, 3 weeks, $5.5 billion have been pumped into the Bitcoin ETFs or other crypto-related products as well. And what we've discussed on this channel, go look at my recent videos, go look at my videos earlier on in the year, specifically around when MicroStrategy was purchasing the Bitcoin, what we were seeing was the ETFs were offloading large quantities of the Bitcoin that they had. So on one end, you have the buying from MicroStrategy, and on the other end, you have the selling from the Bitcoin ETFs. Well, now we're seeing billions and billions of dollars of dollars going into Bitcoin and crypto-related ETFs. So where's the liquidity coming from? And so this is where I think potentially I was very wrong in my thesis that we talked about just a few days ago that maybe we're not going to see a bull run, but I do think that we are. We're in the bull run. We are in it. We've already seen massive moves in the prices. I mean, Janover, the company that's buying Solana, they went from basically like under $5 to $80. That's you do the math, 12x or something like that in just less than 1 month. Now, is Janover going to stay this high? Well, we're going to have to kind of wait and see. Potentially, they're going to even go higher based on their plan to buy more Solana coins, but we really have to focus on where the Solana price is going to go. Because if they're the only institutional buyer, and we know there's billionaires that are dying to exit the coin, they just need the liquidity. Well, now you have $1 billion of inflow from Janover, so this could be an exit liquidity for these earlier stage investors. And a lot of people at this point in the cycle, they're not thinking about that. They're going to see the price of Solana go up, and they're going to say, "Whoa, I need to buy Solana because Solana is getting better," and everybody's investing in it, not realizing that the insiders and the early investors are using what Janover is doing for exit liquidity, the same way that we're seeing Bitcoin. Or early Bitcoin adopters or people who've been wanting to sell their Bitcoin, for instance, the FTX estate, for instance, potentially Mt. Gox and these other bankrupt companies that were in crypto. They need liquidity to be able to sell their Bitcoin on the open market to then go refund customers in, whatever the native currency is. And so that's definitely a potential as well to understand. But as investors, as analysts in these markets, understanding this dynamic and understanding what the exit liquidity looks like, this final stage of the bull run, in my view, is the time to take profits. And many won't, but many will. And the people who will take profits and kind of sit on the sidelines for a little bit, they're going to be in a much better position in a year or 2 years when the market is in a significant bear market. But we're not there even close just yet. According to New York Diggs research, they crunched the numbers and the numbers are striking. According to them, they say if we apply a 10x money multiplier, which is a rule of thumb reflecting the historical impact of new capital on Bitcoin's market cap, and divide the total supply of Bitcoin, we arrive at a rough estimate of the potential price impact, a nearly $42,000 increase per Bitcoin. And again, this is just with the 10x money multiplier. And so that's a 40 or 50% increase from where we are today. To reach this conclusion, the analysts at New York Dig reviewed MicroStrategy, Metaplanet, 21, Semler, basically all the companies that are acquiring Bitcoin, and looking at their cumulative equity valuation since they adopted the Bitcoin buying strategy. This gave the analysts an outline of how much money they could theoretically raise by issuing shares at current stock prices to buy more Bitcoin. If this analysis comes true, the projected price is nearly 44% increase from the current prices in the $90,000 range. If capitalized Wall Street money managers perhaps wouldn't mind showing this profit and loss chart to their clients, especially given the current volatility and uncertainty in the markets. The research stated the implications are clear. This dry powder in the form of issuance capacity could have a significant upward effect on Bitcoin's price. And effectively what they're saying is because these companies like DeFi Development Corporation, like MicroStrategy, they're able to effectively acquire debt at very low cost or future cost. They can purchase the Bitcoin, pumping the price and basically doing all of that. But the issue for a company like MicroStrategy is when the buying stops, which MicroStrategy, according to their thesis, it's never going to stop. They're going to continue to issue debt and buy Bitcoin. Now, this works until it doesn't. This could continue to work, or it can continue to not work. We don't know. I mean, FTX worked until it didn't. BlockFi worked until it didn't. Terra Luna worked until it didn't. So we have to keep those things in mind. Moving a little bit along, we are also hearing from Max Keiser, who we know is a major Bitcoin maximalist and an advisor to El Salvador's President Nayib Bukele. He says that Bitcoin is going to $850,000 during this cycle. Let's listen to what he says exactly. And by the way, don't forget to hit that subscribe button. That way you never miss a new video. And also give this video a free thumbs up because crypto is not free, but thumbs up are always free. Let's listen to Max.
So Bitcoin should trade at parity to gold in terms of market capitalization, which means that it could easily go from 85,000 a coin to 850,000 a coin during this cycle. So say the next 5 years. So you got 1,000% return in 5 years. I think is a reasonable expectation for Bitcoin as it achieves parity in market capitalization with gold, which it definitely should because it does everything gold does, but it does it better.
Now, here's the deal. A lot of Bitcoin maximalists or other YouTubers here would say, yeah, Bitcoin's going to $850,000. Well, first of all, we are in this cycle right now. It's not 5 years out. 5 years out is the next cycle. So I don't know exactly what Max Keiser is talking about, unless he's talking about, we are in the cycle because the Bitcoin halving already occurred and maybe that's the reset of the cycle. I don't know, but we are in the bull run. We are in the Bitcoin cycle right now. 5 years from now, that's the next cycle. So if you're talking about the next cycle, we're going to 10x and you're saying it in this cycle to get people hyped up about Bitcoin in this cycle, but you're really talking about next cycle, that's confusing. And it's potentially confusing on purpose because maybe they believe that Bitcoin is not going to $850,000 this cycle. I personally don't think it is. I think that we're going to be significantly under $500,000 in 2025, 2026. I don't think that we're going to go significantly higher. I do think that there's a lot of opportunity in the altcoins to be making significant increase because here's the deal. The Bitcoin maxis are going to tell you what they want you to think about the coins and all of this. But there's a lot of things going on that are anti this Bitcoin to the moon thesis, like this, Democrats reverse course, and they're now opposing the Senate crypto bill. The surprise statement came as the Senate was expected to begin consideration of the stablecoin bill in the recent days. And so this article from Politico says a group of pro-crypto Senate Democrats said that they would oppose the Republican-led legislation that some of them previously supported if it goes to the floor in the current form. This is a stunning twist that could jeopardize the bill's path forward. I don't know if it was foolish of everybody to believe that they were going to be able to get something done with stablecoins, because remember what I say, like a lot of this takes a lot longer than most of us think. We were told years ago at this point, oh, we're working on crypto legislation. We're working on crypto legislation. We're working on crypto legislation. We're working on it. We're working on it. We're working on it every year, every single year. Then we heard we're going to have a strategic Bitcoin reserve. We still don't know anything about that. Then we were told the states are going to have a strategic Bitcoin reserve. Well, guess what? Already vetoed. Bitcoiners blast the Arizona governor's, quote, ignorance after Bitcoin bill veto. And so the Arizona state senator and Bitcoin advocate said Bitcoin doesn't need Arizona. Arizona needs Bitcoin. Well, that is because the governor decided to veto a bill that would have allowed the state to hold Bitcoin as part of official reserves. Whoa. Now, here's the deal. Like, they were going to, from my understanding, they were going to be putting money for the state's retirement system. It says Governor Hobbs vetoed Arizona's bill, a Bitcoin reserve bill, because it was too untested for the state's retirement system. But the fact is, Arizona's pension funds are only 76% funded, ranking 36th in the nation. Perhaps the tested investment strategies aren't working. And that is true. I mean, even the Bitcoin therapist posted this that says apparently the Arizona state retirement system already holds 53,000 shares of MicroStrategy. You can't make this up. Now, here's the deal. First of all, again, just going back to the bill for a second, these things take a lot longer than people anticipated, right? People thought that we were going to have a Bitcoin reserve this year, like in the first go around. No way. No way. It just doesn't happen that fast, right? People are going to fight it. People are going to say, not yet. We're not ready for it, all of this. Because the point that I think Wall Street is trying to make is they don't want people in Bitcoin. They want you in MicroStrategy. They want you in the Bitcoin ETFs. They want you in all of these other products that they can control versus being in the underlying asset. Because here's the deal. If you own Bitcoin, no matter what happens in everything else, in the Bitcoin ETFs and bankruptcies of centralized exchanges or whatever, Bitcoin is still Bitcoin. Nothing has changed about Bitcoin. But if you have those products, you can get kind of screwed out of your money depending on what happens in the markets. And so let's just do the math here, okay? So if they own 53,000 shares, oh, it shows the number, $15 million. I mean, so they can own MicroStrategy, which is buying Bitcoin literally at the top of the market with debt. In any time their stock price goes up, they're going to sell more shares on the open market to then go buy more Bitcoin. That's okay, but just buying Bitcoin direct is not, according to the Arizona governor, right, with the veto. Now, here's the deal. Personally, not really a surprise. Obviously, the Bitcoin maxis are throwing a hissy fit and all of this. But, you know, I saw this article, and it really sums up what is going on. And this is from Arthur Hayes. Arthur Hayes says that Bitcoin bros at the club may stop the U.S. government from buying Bitcoin. And so the same Bitcoin people who are saying, "Oh yeah, you know, government should just buy Bitcoin through the moon." Arthur Hayes is saying this is actually not going to happen, right? You're not going to see the Bitcoin bros telling the government to buy Bitcoin. Now you may be saying, "Well, why would they do that?" Well, first of all, you have to understand, like, not everybody is in this just for the money, right? There's a lot of people who are already very wealthy who are in the Bitcoin and crypto space, right? Because they believe in building something, right? The better, right? Think about like Elon. Like, why does Elon still work at all of these companies? Like, he could technically probably retire even if he doesn't get all of his non-vested stock and all of that. He could still probably retire fairly decent, right? But he enjoys what he does, right? He believes in the companies that he's building. And so a lot of people in crypto and Bitcoin are not in it for the money. They're already very wealthy. I mean, just look at David Sachs. He sold $230 million in Bitcoin and crypto exposure to take the crypto czar on for the US. Anyway, BitMEX co-founder Arthur Hayes said that the US is unlikely to add more Bitcoin to the reserves beyond what is already seized due to the country's high debt levels and the stereotype behind Bitcoin bros. He said, I'm not really into the whole strategic reserve situation. Now, this is important because, again, the strategic reserve is just a mechanism for people to say, oh, look, the government's buying, so now, the price should go up. But that's not necessarily how it works, as we've seen with MicroStrategy, because MicroStrategy continues to buy and buy and buy and buy at the top of the market, and the market stays stagnant or goes down. So that narrative is not necessarily accurate, right? That if the government starts buying, the price is going to go up indefinitely. That's just not true. And so Arthur Hayes says the US is a deficit country. The only way that they can do a strategic reserve is not sell the Bitcoin they took from people, fine. That's 200,000 Bitcoin. But he said it's hard to imagine any properly elected politician openly announcing that the government plans to print money to buy Bitcoin, saying especially when the popular narrative is a bunch of Bitcoin bros going to the club. Is that really what you want people to think about your policy? This is very interesting, right? Like, is the policy just we're trying to pump crypto? We're trying to pump Bitcoin, right? That's not what the narrative wants. They want the narrative to be. If you look at recent interviews with the president, he says, well, what did my meme coin do? Like, tell me the numbers. I don't even know what the numbers are. I haven't looked at the stock market. Now, whether he has or hasn't, I don't know. But the point is, like, I don't think that he's doing this to get richer. Like, again, the president can probably go and retire pretty well off, right? Maybe he does want to get even richer than he is, but he's fine where he's at, right? I think the crypto thing is more about the freedom of technology, the growth, and also making sure that America stays ahead, which is all very good for the nation, but it's not about the monetary value, right? Maybe in the long term it is, but at the end of the day, the government can go in and say, we're taking over MicroStrategy, and now we have 500,000 Bitcoin. We're taking over BlackRock. Now we have 500,000 Bitcoin. Now we have more than Satoshi, right? So effectively, the US, whether it's the government or the people, we already have a large majority of the Bitcoin, right? Through these companies that are American based, that are on our stock markets, that are regulated by our regulators. And so that's a very good thing. But that is really where the policy is moving towards, right? The policy is not necessarily about implementing crypto into everything that we do so that we can pump everybody's bags. And again, this is potentially part of the reason that they're backing off of the stablecoin bill. I don't know all the reasons, and honestly, it doesn't really matter what all the reasons are. The point is that they're stepping back from it, so maybe we won't get it. Maybe it'll change. Maybe it'll be more pro crypto. Maybe it'll be less pro crypto. I don't know, but generally speaking, they're not going to just pass laws or allow the government to buy Bitcoin to pump everybody's bags. And that's going to end bad anyway, because again, that will be exit liquidity for early investors. And so everybody else who's buying, when the government is buying and the price goes down, the government doesn't care if the price goes down, but you in your portfolio would. And so there is an issue there. And that's effectively, I think, what Arthur Hayes is trying to say here. So many crypto industry leaders believe that if the US starts buying Bitcoin, it could set off an aggressive domino effect. The co-founder of exchange aggregator 1inch said during an interview that if the US were to start buying Bitcoin for strategic reserve, even smaller countries may soon struggle to acquire the crypto. He said, I'm pretty sure soon we'll see countries battling over who owns more Bitcoin. The US will start. Now, this scenario is definitely possible, but I think that this is much further out than many people think. I don't think the next cycle or the cycle after that. This is probably much longer than 10 years where we're going to see these public displays of trying to get Bitcoin. Because again, MicroStrategy has acquired over 500,000 Bitcoin, and the impact to the price is very minimal, right? Because if you look at the actual charts of when they're buying mostly towards the top. And so, yeah, we had a little bit of a bump up here, but look at all the buying up here at the top. And it came down after. And then they bought more, and we haven't even reached those highs. Now we may, right? This is only in a 6-month time frame. But if you look at the history of their purchasing and the price activity of Bitcoin thereafter, it's not major moves, right? We're not seeing like a buy and then boom, pump, and then another buy and then boom, pump, and then another buy and boom, pump. We're not seeing that. We're seeing volatility across the board. And some of these purchases were very, very big, billions and billions of dollars of Bitcoin. And as we covered earlier in today's video, the crypto ETFs had $5.5 billion of inflows, right? Even if you say not all of this was Bitcoin, so even $4.5 billion into Bitcoin or $4 billion into Bitcoin. Where is the liquidity coming from? Where is all of this Bitcoin coming from that's selling? Because again, whenever there's a buyer, there's a seller. So who are the sellers? Maybe it's Mt. Gox, maybe it's, early investors in other countries. I don't know. But eventually that liquidity is going to dry up. And then where's the Bitcoin coming from? That is really where you're going to see the Bitcoin price move. And once you see the Bitcoin price move in that situation, it's just a matter of at what price is the next tranche going to unlock. So for instance, let's say at $100,000, okay, all the Bitcoin was bought up, right? There's nobody else selling at $100,000. And then there's very little liquidity up to 125,000. So we go from 100 to 125,000. There are people, there are entities, there are companies, there are trading partners, there are algorithms that will sell at $125,000 when it increased 25% from $100,000. They will sell. So then you unlock a new tranche of liquidity. And then when that liquidity dries up, there'll be another tranche at maybe 130,000. And then 135,000. And basically it's just chipping away, eating away at all these tranches of sell walls. But here's the deal. When the price falls back down, as we saw, we went from $110,000 down to basically $80,000. And now we're kind of still closer to 80,000 than we are to the all-time record high. And I think a lot of the reason is because the algorithms reset the sell walls when the prices fall. So now you have to go through that tranche of sell wall again to get back to where you were, which is much harder because people think the market is over or I should have sold prior and yada, yada, yada. Keep going on and on about the psychology behind the markets. But nobody knows exactly what's going to happen, when it's going to happen, or how it's going to happen. But based on what MicroStrategy is doing, I don't think that the US government buying Bitcoin would immediately show price movements to the upside. Because I would imagine the US government's not going to buy as much as MicroStrategy is buying. I would imagine they maybe buy 5 million a week or 5 million a month or something like that. Like probably be a very small amount to start if they were going to buy at all, which it seems like they're not doing. So all this hype around strategic Bitcoin reserve buying Bitcoin, not happening. All this hype around the stablecoin bill, maybe not happening, maybe it will happen, who knows. And the strategic Bitcoin reserves at the state level also not happening or is not happening as fast as people thought. And so people are not, they're ignoring these signals and saying, no. We don't have to worry about Arizona. Wisconsin will do it. Wisconsin won't veto it. It's like, so you think Wisconsin is going to pump the global bag of Bitcoin with whatever they're going to purchase? Guys, this is ridiculous. And this is just another reason for me to look at the market and say, okay, where are we? Could we see a 10x? And when do we exit the market? When is the bull run over or ending? And I think we're close. Because we could see this 10x multiplier, right? We could see this 10x chart in Bitcoin. We could potentially see what Max Kaiser is saying here with $850,000, but there has to be a liquidity shock. And there potentially will be. Because if MicroStrategy is buying, GameStop is buying, potentially the US government is buying, a state is buying, other companies start buying Bitcoin, the Bitcoin ETFs are buying, there's all this buying in the market. There will be that push higher once that tranche of sell wall orders are filled. But here's the deal. Once we make that jump from $100,000 to $125,000, again, there's another sell wall and the the viewpoint of where the market will be will probably accelerate. More people will get in because remember, people buy Bitcoin at the top. They don't buy. Nobody is paying attention to Bitcoin when Bitcoin was $20,000 just a few years ago. But when Bitcoin hits $125,000, $135,000, $145,000, believe me, people that have not even thought about Bitcoin for years, they're going to want to buy Bitcoin at $150,000. And they're going to be joining the exit liquidity for the rest of the market. Because these big companies like MicroStrategy, like Janover, like Marathon Digital, all these companies, they don't, even governments, they don't care where the price goes because they're thinking decades, they're thinking centuries. Governments are thinking even further than that. They're thinking, well, even if this is just a hedge, we're going to own it, right? And so you don't have that privilege of being able to buy at the top and then wait till the next cycle. A lot of people are going to do this, including experts, including YouTubers, including influencers. They're going to be buying the top. They're going to be on their videos saying, oh my God, look at this crypto. This crypto is next. This crypto is next. Go out, get this crypto. And meanwhile, we're going to be at the top of the market. I'm letting my viewers know now. The next tranche that gets broken and pushes the liquidity into a supply shock and pushes the prices much, much higher, the smart money is going to be selling into this. I'm telling you, sell the rip, buy the dip. But the dip is going to be pretty deep. I'm expecting Bitcoin to go above $150,000 at some point. Massive euphoria. Everybody's talking about it for a few weeks. It's going to go even higher. People are going to start buying its Bitcoin ETFs. People are going to start putting in their, retirement funds and all of this. And then everybody's going to kind of get bored of it after a few weeks, and the market's going to start going down because all of the early money, all of the people who've been buying over the last 3, 4, 5, 6, 7, 8, 9, 10 years, they're going to be selling into this liquidity. That is exactly what's going to happen, guys. And by the way, I made a list. I don't have it on the screen, but I made a list of flags that have already been hit this year, that the bull run is not only underway, but we are in late stages or close to the end of the bull run. Now, the first flag was meme coin season. Meme coin season was alt season, right? It was just that was this cycle's altcoins because none of the other altcoins really pumped. XRP pumped a little bit. Solana pumped a little bit. Well, Solana pumped a lot. But pretty much none of the other coins really pumped. I mean, the Cardano community is like, Cryptoviser, are you still waiting for 10 cents? It's like, no, I'm actually waiting for 0 because I'm not buying Cardano. But here's the deal. Cardano hasn't even performed that well either. People are like, Cryptoviser, you're waiting for 10 cents? I'm like, are you waiting for $3? Because we're nowhere near that. But we went from 35 cents last year up to $1.20. So we went 4x. 400%. That's not a bad return, but it's not what the community was like. Are you waiting for 10 cents? Are you waiting for $3? Anyway, yeah, a lot of these coins, the new coins pumped, like Sweep pumped really, really hard, but Chainlink, Avalanche, Stellar, these didn't really see that big of moves. Even Dogecoin didn't really even see that big of a move. And so maybe meme coins was the altcoin season for this cycle. I mean, it's possible. It's definitely possible. So meme coin season was flag 1. Flag 2 was the Bitcoin ETF selling off as MicroStrategy was buying, right? Earlier in the year, in January and February, every single time MicroStrategy was buying, we started to see billions and billions and billions of dollars exiting the Bitcoin ETFs, which validated my thesis that the Bitcoin ETFs were to control the Bitcoin market. That's why they were created. And we saw that exactly with MicroStrategy. Because if they were buying in January and February and the Bitcoin ETFs were not selling, I believe the prices would be higher. And they wouldn't have dumped down to like the $80,000 range, as you guys can see right here. But yeah, that was flag number 2. Flag number 3 was, even though the meme coin season may have been the altcoin season, as I covered just a few weeks ago, altcoin season has already begun. We've already seen 10x's in many altcoins. One that I covered on this channel was Ergo. This was a perfect example of what altcoin season looks like. And people will say, but Cryptoviser, we're not in altcoin season. It's like, what? This coin went from beginning of April from 5 cents to the middle of April, in 2 weeks, to 50 cents, 60 cents. So it went over 10x in 2 weeks and then came cratering down. People are going to call this a pump and dump. I mean, that's basically what it looks like on the chart. But, at the end of the day, that's a 10x. A lot of people took their money out at 10x, or took their money out at 5x, or 4x, or 3x. And so this shows that altcoin season is already underway. But nobody's paying attention to these things because everyone's just paying attention to the coins that they own, which is like, what about Solana? Solana's not 10xing. It's like, no, it already 20x or 40x. It went from $8 to $260. What do you think? It's going to $1,000 this cycle? To get to $1,000, it would have to, what would the valuation be? Like $600 billion, something like that. Anyway, flag number 4 was CEP, right? CEP. Well, we can look at Janover as a perfect example as well. But CEP is Cantor Equity Partners. This is going to be the new Jack Mallers company called 21, which is going to be another Bitcoin acquisition company. And this company, from the new company's valuation, is only going to be worth about $10, $12, and it's already 3 times that. This is also showing that the market is in euphoria and in a bull run and not looking at the fundamentals. Because if the stock is only worth $12, why would somebody buy it at $13 or $14 or $35? And then the flag number 5 is that we're in the 12 to 18 month period after the Bitcoin halving, which historically is the most volatile in the Bitcoin markets, in crypto markets. So I do think that we're in the final stages of the bull run. And these kind of predictions that we're seeing are all very possible. But we have to think about these things realistically as well. Because a lot of the things that everybody's been anticipating, like the stablecoin bill, Bitcoin reserves, and all of this may not actually be happening. And it doesn't really matter. I mean, Arthur Hayes is still very bullish on the crypto markets, regardless that his viewpoint is that the government is not going to buy Bitcoin, or that the actual influencers who are influencing the administration are not going to push to buy Bitcoin. Maybe they will, but who knows? Maybe they'll just push more, investments into Bitcoin and crypto-related ETFs and retirement fund usage and all of that. I mean, guys, just a few years ago, there was no such thing as a crypto IRA, and now you can have a crypto IRA at banks, right? At Fidelity. They will custody their crypto in an IRA for you for no fees. I mean, that is miles ahead of where we were just a few years ago. And so there's a lot happening in the markets. But we also have to think about what the future holds, right? And because the Bitcoin narrative hasn't changed, but the circumstances around it change. And we just heard that Warren Buffett is going to be stepping away from Berkshire Hathaway. I mean, he's like 94 years old. It's probably time, right? But he just exposed the truth about money and makes the case for Bitcoin at Berkshire Hathaway annual meeting. By the way, it doesn't specifically say Bitcoin, but the Bitcoin maxis, everything means Bitcoin. You could say, I'm hungry. Let me go get a coffee, and be like, you want Bitcoin? It's like, no, I want coffee. It's like, wait, but you just said Bitcoin. I'm like, no, I said coffee. We're like, but how are you going to pay for the coffee with Bitcoin? It's like, no, with a dollar bill. Anyway, you guys kind of get the point. I'm just joking around. Warren Buffett just exposed the truth about money. He said, fiscal policy is what scares me in the US. The natural course of government is to make the currency worth less over time. They devalue it at rates that are breathtaking. In the end, if you've got people that control the currency, you can issue paper money. I mean, this is what they do. But the point of me bringing up Warren Buffett is because now that he's stepping back from Berkshire Hathaway, this could be a new, kind of a new company for Berkshire and the investors, right? A new generation. Because although Warren Buffett was not really into Bitcoin, he's into money, right? He's into money. And his organization is about increasing the value of the organization. And so it wouldn't surprise me if over the next 5 to 10 years, we start to see Berkshire Hathaway kind of opening up to crypto as it becomes more mainstream, more widely accepted. And maybe they won't directly invest in Bitcoin. Maybe they'll get Bitcoin ETFs or MicroStrategy or something like that. But it could be a new day for Berkshire Hathaway. And obviously, Bitcoin doesn't need Berkshire Hathaway. We don't, as a community that is investing in crypto, need Berkshire Hathaway. But I do think that it's something to say when a thesis is able to be changed based on new information, right? Where you could think your coin is the best coin. I mean, guys, this happened in previous cycles. In my portfolio, I thought these coins were the shit, right? I thought these coins were going to change the world. I was going to become a multimillionaire. You know, the world was going to be adopting these technologies, and they just didn't fall out that way, right? Or as fast as I would have wanted to see it, or probably you. And so we really have to be able to kind of change the thesis, change the narrative. Because if I held to my thesis during the previous cycle of hold, the way that XRP Army hold, they're probably the best investors in the world, right, in terms of long-term holds. Because the XRP Army has been behind the XRP coin from day one. A lot of them have never even sold the coin, period. And for me, I don't know, like holding a coin for that long, it's a huge risk. Now, it's paid out for XRP holders. I mean, most of these XRP holders, they bought under a penny, right? So we're at what, 200,000% increase, something like that. But the point is, like, at some point, some people, you do have to reevaluate your portfolio, because there's a lot of people, a lot of amateur like investors who invest 100% in an altcoin that they believe in. And even though the market may be changing around them, the technology may be changing around them, they don't change with it, and they just stay with that one coin. And this ends up being the downfall of their portfolio. And this is why I believe in constantly reevaluating your portfolio. I'm constantly reevaluating, constantly adjusting, constantly changing the portfolio based on where the technology and where the blockchain and where the market is today. Not where I want it to be, where it is. Because where it is what I'm investing in. Where it wants to be is what I'm investing in. But if they only have one of those, it's not good enough. They have to have both. They have to have what it is today and what they're trying to achieve in the future. For example, Ethereum, what it has today, right? The most used blockchain, highly interoperable, a lot of DeFi. What it doesn't have, what it wants in the future, higher scalability, lower fees, easier transacting between chains, and faster throughput and bandwidth, right? It's usable today and it works today. And it's the number one today. But tomorrow they want to improve. And granted, maybe they never will. Maybe it'll just take forever to do it. But that's where they are today. Now, if I look at another chain, and for instance, XRP, where they are today, no interoperability, no DeFi, no real adoption of the coin. Ripple has adoption. The coin doesn't really have adoption. And where do they want to be in the future, right? More integrations, maybe an XRP integration with stable coins like USDC or RLUSD, kind of more broad expansion, bank integrations. So there is a lot more future versus what we have today. But today is really what I'm looking at, because especially for these legacy chains, if they've been around for a while and they still can't get to the baseline of what a lot of the newer chains like Solana have, or Sui. Unfortunately, this is why Solana is the best performing crypto of the cycle, because it has the technology that Ethereum is trying to achieve, the technology that Cardano is trying to achieve, all the layer twos, Avalanche. But at the end of the day, does it have the usage? Well, we saw from the meme coin season, not really. Not really. Because meme coins is not usage or adoption of the technology. It's just a freaking joke. Anyway, hopefully you guys enjoyed today's video and the discussions that we had. I mean, there is a lot going on in crypto. There's a lot happening in the markets. There's a lot to take in. And what we try to do on this channel is break it all down in a way that is easy to understand. And again, these are just my opinions and these are just my analysis of the market. Obviously, I could be wrong. Do your own research. Make sure you understand the risks involved. Give this video a thumbs up. Hit that subscribe button. I'll see you when I see you. And as always, crypto on.